Well, the markets certainly seem to be in a bit of a profit-booking mode at this point in time. The benchmarks, of course, are off by about 0.1%. We've come off the day's lows at least. But the advanced decline ratio also at this point in time is looking largely even. Stevens, we've got in the frontliners an HDFC Bank that's bled close to 2% and IDFC as well. Things are looking tough in that particular that particular stock. We've got a BPCL that's off by 1.5% as well as a Bharti Airtel. However, on the gaining side then, let's take you through what's moving on the upside. We've got the cement pack. That's the pocket that's doing well. So we've got an ACC, an Ultratech Cement, Jayaprakash Associates and Ambuja Cement. All of them right now are trading with some very smart gains. Not just that, the auto pocket as well. Despite the fact that most of the auto numbers were below what the analysts were expecting, we've got a Maruti Suzuki that's at 1495 right now, and M&M as well. 963 is the level that one's trading at. In fact, in the broader markets as well, it's a fair bit of momentum that we are witnessing. The mid-cap and the small-cap side is doing very well. In fact, let's pull up the charts for a Mahindra Holiday as well. It's 6% higher at this point in time. In fact, do remember the stock has been up for the last 3 days, and today as well, things aren't looking any different. It's up by close to 6%. In fact, some of the other big movers then, we've got a GMR Infra. We've had the news of the Singapore High Court issuing a stay order on the Malé Airport. So that's driving that one higher by close to almost 6% when we last checked, about 5% higher at this point in time. And Nalco as well, that's higher by about 5%. Also, that's largely being driven by the news of price hikes coming in that. An Emphasis 405 is the level that's clocking in. And Adani Enterprises, of course, the company had announced that they're looking at issuing bonds worth $1.5 billion to further invest in their Australian subsidiary and the Australian projects. That one's also higher by about 4%. AB Nuvo then, that's also showing some good momentum. A Suvin Life Sciences from the mid-cap and the pocket also needs to be pulled up because that one has been running up over the last few days. Today also, in fact, the stock is looking pretty strong. It's up by close to 9%, and there's a lot of news about some of the larger pharma companies could be looking at taking over that particular name.
Let's also quickly check in on the currency and the fixed income markets. What you are seeing with the rupee is weakness, and it's down by roughly 30 paise in trades today, after 27 paise as we speak. And this is because of some importer buying that is being seen in the market, and it is not entirely because of oil marketing companies buying in the market, as some reports are seeming to suggest. But again, broadly speaking, the rupee, the undertone for the rupee really will remain weak going forward. You did see some strength come back to the market, or rather to the currency market, to the rupee in the last few days. But this was almost entirely driven by FII flows, and you did see the equity market surge over the last few days. So that did support the rupee. But overall, the underlying signal really for the rupee is weak. So you're going to see it in all likelihood bounce around within the 54.50, 55.50 range, at least for some time. You do have some macro positives coming in from the GDP point of view, where after last week's upgrade by Goldman Sachs, you have today Morgan Stanley revising its outlook for GDP growth from 5.1% to 5.4%. So this is broadly expected to work as a positive, but as we speak, the markets continue to trade negatively. So for the rupee, it's likely to stay within the range that I just mentioned. But in the fixed income markets, you did have the Reserve Bank of India last Tuesday make an announcement that they will buy back debt to the tune of about 12,000 crore rupees tomorrow, which is the 4th of December, which to some extent is expected to address the liquidity tightness that you're seeing there in the market. The daily deficit's been running at over 100,000 crores. So to that extent, it's helped the yield on the 10-year benchmark bond come off marginally. So where it went to levels of 8.21, 8.22% last week, it's come off. It's trading at 8.15 to 8.17% and 8.17% as we speak. But this is again broadly the range you'd expect. You're likely going to see. There was also an announcement from the center on Friday that they would be increasing the FII debt limits for both GSECs and COP bonds, but that isn't going to work too positively on the fixed income markets, and most traders tell us that you aren't going to see the yield on bonds drop below 8.1%. So 8.1% is as best as it's going to get going forward, until such time, of course, you see inflation come off meaningfully, and also rate exercises coming from the Reserve Bank of India, possibly in January.